So the SEC, I understand, have qualified 232 companies so far, about 180 or so of which were Tier 2, and 34 of those were CrowdCheck companies, which we are quite proud of. I am a huge fan of Reg A. I love the idea of a completely transparent market, and I love the idea of retail investors being able to invest in things that they think are really neat. There are some super companies out there, and they may succeed or they may fail. Startups tend to fail. But isn't it great that they have that the investors have the chance to give these teams and these interesting ideas a way of developing their markets, and hopefully the investors might make some money at the same time if all things go well. Secondary trading is not necessarily for everybody. Some companies are just not ready yet, but when they are ready, they really do need the liquidity. And that's one thing that we are seeing again and again. If you want liquidity, you're going to have a forum for that trading to happen. Only a couple of companies have gone that way so far. We'd like to see more. I would like to see FINRA help with the whole process when we have gone through the process of getting onto OTC markets. The whole FINRA review process has not been as seamless as we would like to see. But only when you have that kind of liquidity at the end for the companies who are looking for it, are you going to be able to attract people to Regulation A and let Regulation A have its full effect. But liquidity is important for some people. Some companies are looking for long-term investors, and that's great. But for companies who are looking for a mix of investors and to give their investors an exit, you're going to have some kind of liquidity. So OTC markets is playing a very important role in there, and we would like to see that supported by all of the regulators too. The things that I would love to see for Reg A, and number one is something that I think is very close to the heart of OTC markets, which is state preemption for secondary trading. Because it's a mistake made by a number of different folks who came into this thinking, oh, there is state preemption, and that means that we can be trading and don't need to go through all of the state requirements for doing secondary trades. Unfortunately not true. It's only initial review that is preempted at the state level. And so that means that there is a need, if you are going to have trading, to comply with state securities laws, which means you've got to know where the buyer and the seller are and know which of the state securities exemptions from registration is going to apply. And I really would like to see an absolute blanket preemption of all of that, because investor protection comes from the ongoing reporting for Tier 2. So just preempt Tier 2 companies from state laws altogether. I know the states will hate that, but it's the only way we're going to make trading work. The other thing I would really like to see is an increase in size. What we're seeing for the very small companies that we generally work with, 50 million is kind of aspirational. Most of them are not going to hit it. But there's a lot of companies making IPO filings in the sort of $75 to $100 million range who would love to do Reg A instead of doing a full registration. And I think that it would be really good to help those smaller companies and not force them into the full reporting and registration requirements before they're really ready, when they're still a very small company. So we're seeing much better companies, and some of them have been quite successful. There's counterpart to that, though, is we've seen some withdrawals. Some of the companies that we've seen and worked with have gone to the Reg A markets and filed and got qualified by the SEC and just not had the sort of response that they were expecting.